Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. I'm sorry I'm late here. We got CPI coming out. The number, core CPI, month over month. Spot 2 versus expected spot 3. Market is hopping on that. That was kind of the whisper number, so I'm a little bit skeptical on their ability to maintain this, but it goes. It's going. Ooh, look at that volume cluster at 28, man. They already traded 20K up there. It's funny that we get the number from literally everything but Bloomberg TV Live hasn't dropped it yet. Really? Well, that's why nobody watched Bloomberg. Why would anybody watch Bloomberg TV? Like, I've got the digital description that lets me watch it live, and I don't use it. What was that? That was CPI. Are you not? I apologize for being late. See what you get. Look, there was no way I was going to trade this anyways, so. Run my E-Trade platform at the same time to watch the portfolio, and it popped on it. No numbers yet. Wow. Well, I'm just amazed at the amount of volume that traded there around 28. So hold on a second. Nick Timmeros, why the Fed won't overreact to one appreciably better CPI report. Inflation has slowed only to rebound later. The auto and shelter disinflation has been anticipated for months. That said, any slowdown in the monthly pace of core CPI, a bigger deal than any base effect induced year-over-year drop, would be welcome news because it would follow 6 straight months of spot 4 month-over-month readings. Yes. Okay. They're pushed a little bit higher. They're still developing a massive amount of volume. 40K net long contracts. Why do you advocate trading the micro treasury as opposed to other futures? So if you have the bankroll to trade ZN, I would absolutely trade ZN. But what the micro treasury yield futures give you is just the minimum amount of risk possible, right? If I come in and I take a trade, even if I had eaten that whole thing, even if I had eaten that whole thing, you'd only be down $40 right now, right? Okay, so when a catastrophic, absolutely massive piece of news only loses you $40-50, that's like one tick in ES, right? Okay, that gives you a lot more room to learn. And one of the biggest problems that we see with retail traders on futures is that they're just over leveraged. I mean, the leverage is kind of one of the advantages to futures, and that's where professionals can make a ton of money, right? But for most retail traders, you know, all that does is take you out of the game faster, right? I could come in here and I could have a catastrophic loss like that, like 50 times in a row before I would have to refund my account, right? So that gives you the chance to keep trading long enough to actually learn what you're doing and figure it out. And that's why I like the micro treasury yield futures. Also, you know, you can do these spread trades without having to figure out ratios and all that sort of stuff. So that's also a benefit of it. Can come in, you can take a yield curve trade and you can hold those for months. Francesco, good morning. How are you? Man, I am just astounded by the amount of volume that the 10-year is doing here today. I mean, so when that number come out and it was lower than expected, I of course expected to jump. There is a case to be made that we should be a little bit cautious here on, you know, thinking that this is going to like trend all day, because it was kind of the whisper number. Like people were kind of expecting that it was going to be a little bit lower than expected, right? So just kind of keep that in mind. But man, the amount of volume that's traded, I mean, look at this. This is 10,000, 10,000, 10,000, 12,000, 11,000, 15, 16, 18 at 112,000. Okay. So like the prices aren't just like rolling over. It's not like it's just pushing up on no volume or anything. Like there's like massive profit taking or something, like there are orders trading against this. Which means, by the way, that there are like some massive losses on them coming up from 28 to 112 even. But I can't remember a time where I've seen something like that, where a big news event had that much volume trading off of it, like both ways. Did you do push-ups? Why would you ask me if I... Oh, because he's Mr. Push-Up. No. I haven't done push-ups. No. Man, I hit my legs at the gym pretty hard on Monday, and I am definitely feeling it. Like I'm getting the 2-day out delayed onset muscle soreness. Like I woke up in the middle of the night and I could barely walk to the bathroom. Like sit down. You know, have to put your hand on the seat to lower yourself down. It was bad. I mean, it's good, but means I've been slacking on my legs. Means I've been slacking on the workouts the past few weeks, but I think we should be back on track now. I think it's I remember reading something that delayed onset muscle soreness seems to be related to like how sensitive your immune system is and so forth. And I have a you know, autoimmune problems of some sort with like gut issues and so forth, and so I think that's why I get the DOMs so easily. Like if I work out a muscle group that I hadn't worked out in a week, then I'll get it. Who to? I mean, I suppose it's possible that this you know what? I'm gonna take a sim trade here. Oh, whoops. Hold on. I still have this set to do a volume stop, don't I? Yeah. Okay. Oh no. This is a hyper speculative trade, but we've seen so much trade here. I really don't think this is sustainable. I think that it's going to have to come back, and significantly so. As far as I remember, the reasons why DOMS occurs is still unclear. It is still somewhat unclear. Yeah. So I've seen research that suggests that it could be related to your immune system, but they're still not 100% sure what causes it. And they're always doing all of this stuff to see what reduces it, and they haven't really found any super good solutions. Okay. How do I know when I'm on a... Okay, so that's actually a really good question, GB. So first, the main thing is you can't normally see this window, but it's behind my picture, but it lists my account on this little thing right here. Okay. But then the other thing is, if you look at the DOM itself, there is, at the top it says the instrument dash and then the account that you're using. And I only show the first digit of that. So if I was on sim, instead of an S, it would be a number. And that's how you can tell when it's on sim versus live. Well, I think I should probably take one contract. What is your jigsaw code? What do you mean by that? You're not trying to steal my license key, are you? Oh, when you buy it. So if you want to use my affiliate link, there's an affiliate link in the video description below. So if you just use that link and you buy Jigsaw through that, that'll... I'm kind of debating here. So I would expect it to possibly come back to this distribution here. No, I am going to take one. Okay. Oh, I already had taken one? I screwed up. I screwed up, guys. Well, okay. I can always get short again if I want to. So I would expect it to come back into this, where this first volume cluster was. And I was kind of debating, well, but they could go a little bit lower too. But I wanted to leave one contract on and I accidentally took both of them off there. So I think that I can kind of, well, actually, it looks like that they are reacting to the VWAP here. Okay, Barkin is speaking at the moment. Saying the Fed has reacted as aggressively as it could. TT versus Jigsaw. So Jigsaw absolutely has the best DOM, but TT is the highest quality, best platform out there. If you can afford TT, then absolutely go for it. But realize that it's like $150 a month or something like that for the cheap version. Like 500 for the more expensive. So TT is really geared more towards like a CTA, right? If you're going to be doing a CTA or a commodities trading pool, then I would absolutely try and get TT. But Jigsaw still has the best DOM. And I think you can use them together. Or I think when we looked last time, I couldn't see where you could use the TT data, but I'm pretty sure that they do work together. Well, I tell you what, this thing is giving you crazy clear order flow signals here. I just missed one. So there's a little stack there at 25.5. Orkin says demand is settling down. We are trading near max pain in ZN based on open interest. This is absolutely like a blockbuster move. So by the way, I think it was Adam that had asked yesterday about like the dollar. Now, remember I was saying, well, if the inflation is higher than anticipated, probably what you're going to see is the dollar rise, because that means interest rates will probably be higher. And so more money will come over to the US to invest in the dollar. Today, we got the opposite, which is that the CPI data was less than expected. And so interest rates move lower. And as a result, the dollar moves lower. See how that works? Of course, the dollar can do odd things sometimes, but in this instance, it did do what we would normally expect it to. Oh, now that's interesting. Wages are up 4.4% in the past year. Inflation is up 3% in the past year. So Americans should begin to notice this wages outpacing inflation. I don't know though. I've been noticing a couple of weird things. Remember yesterday I was saying it seems like there are watches out there are actually like a lot cheaper than I anticipated. Apparently like the whole luxury watch market like absolutely shot off in 2021 when, you know, crypto and all of these other things were popping off, and the prices have like precipitously collapsed. So I'm like going out, I was just kind of going around town looking at things, and I went to what is this store called? I don't think I'm supposed to shop there anymore, but I went. What is it called? Why am I having a hard time remembering the name of this freaking store? Kohl's. I went to Kohl's. And large sections of their store were like on like 70% discount. Like all of their jewelry was 70% off. It's like, what's going on? Why are they like clearing the inventory? Are they going out of business or something? Has the woke stuff hit them that hard? Like, it just didn't make sense to me. And then, you know, there was the Amazon Prime Day, and what I was getting from Amazon Prime Day, or what I was hearing, was that it wasn't doing very well. Amazon didn't do very well on Prime Day. And you know, I went and I looked at the deals, and I saw some really good deals, especially on watches. There was some of the watches that I had looked at were like 40% off. I'm sitting here like, does this mean something about the economy? What's going on here? It seems to me like the economy is just in a really bizarre place right now, where we are getting disinflation. But a lot of people are still hurting. And I think that the spending has pulled back a ton, and that companies are having a hard time dealing with it now. So that does make me think about this scenario where we get a recession in the second half of the year, right? Seems to me like a data point that would suggest that we are on the trajectory towards a recession in the second half. But then you look at the stock market, right? And the stock market just doesn't quit. I've done okay. I'm still mad. So I had a stock, Sumo Logic, and they got bought out at the lows. So somebody got like a fire sale deal, And I'm so pissed because I thought it was a great company. I thought that they were squandering it. I think they shouldn't have sold. And I'm so pissed at the management that they sold. Because after that happened, then all of the small caps and the non-profitable tech stocks staged like a huge rally. They would have been in a good spot and well positioned, and they so dumb. But management took the quick way out, I guess. Let me check that because yeah, ticker's not even out there anymore, so that did go through. Good morning, Gus. Okay, by the way, where did I take that sim trade off at? 25.5. So right where we're at. If I had taken that live, maybe it would have been $30, but I don't know. That it worked out that time, but I haven't had too much luck with that particular kind of trade setup lately. So that one was just it looks like they've reached, they're pulling back a little bit. There's like insane amounts of volume in here. There's no way that they can keep up this level of volume, so it's gonna pull back. It was the what I was thinking. But like I said, it's kind of plowed through me so many times lately doing that sort of a trade that I wasn't willing to do on my live account. Now I'm coming back and looking at this and I'm like, well, I did so well. Maybe we should try taking some live trades. The order flow was really good in that through that whole thing, but it seems like the order flow is kind of becoming a little more fuzzy now. So that doesn't necessarily help. I mean, I guess there is one scenario where this could come all the way back. You haven't seen the volume wash back in the treasury at all, though. Jason Furman, the headline is CPI inflation fell to 3%, but mostly this is the huge June 2022 dropping out and what is almost certainly a transitory 17% fall in energy prices over the last year. But underneath the numbers show moderation with the lowest core reading of the inflationary period. Jason Furman. Inflation is coming down, but not just transitory declines of headline, but underlying too. But it is coming down more slowly than forecasters expected. Inflation is still running well above Fed's target. Economy is very strong. Interest rates are not that high. Most of the relevant increases happened a while ago. The banking sector stabilized. Fiscal policy may be mildly expansionary. The Fed should still... Yeah, I agree with him. Okay, so... Interesting question. I don't think that it will show us very well at the moment, but let's go ahead and look anyways. What does FedWatch say? The volume on that news release seems really greedy. Yeah, well, I think that there had to have been some really massive players positioned on that. Because again, like look at 38,000 ended up trading at 112 even, right? And it was like 10,000 traded at like almost every price up there. And not that like 10,000 trading at a single price is like that much. But for them to have traded it that quickly is just unreal to me. That's why I thought it would come back as a good clip, and it did. So yeah, there is, I think there's still this possibility it comes all the way back down. It could be a trend day too, though. I mean, there's just enough interest in this thing that just about anything could happen. And I think that when we dive into the numbers, there's a lot of reason to be taking both sides of this, right? Because on one hand, that was like the best number that you could have gotten, right? But on the other hand, like some of these guys were saying, we still have some problems, and the Federal Reserve is probably going to remain diligent, I think. So let's see here. If we come in here, and I need to do the compare for the July meeting. Sorry, current is 5 to 5 1/4, right? Current target rate is 5 1/4. Yeah. So they're saying 91% probability in July. But when we go to September, they're saying no. And I don't know if that's... Yeah, I don't know. Maybe some people moved over from saying that they would increase in September too, just a slight amount. But I'm not seeing enough of a change. We'll have to come back in tomorrow and see what it says tomorrow. So it's too hard to tell what's going on, right? And I don't know how up to date that data is. With Wednesday's report, the federal funds rate, effectively 5.1%, is above the trailing 12-month core CPI rate and core PCE and headline CPI/PCE for the first time since 2019. Really. So positive real interest rates. Wonder, I'm need to make a note for myself to check the banks at the end of the day and see how much this affected the banks. Looks like the dollar is turning back down a little bit. Okay, dancing around this 3.9% area. Yeah, well, Goldman Sachs is up a decent amount. Can't quite tell how much that is. 0.8%. What is the S&P 500 overall? 0.8. So in line with the index. Biggest winner today, silver at 2.23%. And the only things on my watch board that are negative today is wheat at negative 0.3 and natural gas at negative 3.5. So that is very, very interesting to me. Well, there's still a lot trading here in this spot. Like, we're right at the VWAP. I'm not really seeing the level 2 activity that I was. So I think I could probably take a gamble at 3.9. I don't know. Like, we were at 4% yesterday. Well, let's say today. 4% before this news release. Come down, we're now 3.9. Does this release justify us going down to like 3.8, 3.75? Well, it wasn't that long ago that we were at 3.75. Buying delta has been pretty... Yes, it has. Like, since things died off, there's been another 17,000 contracts or so. Yeah. Like, to my thing, like, well, they can't really keep up this volume. Well, they couldn't keep up that volume, of course, but they've still got a pretty decent amount of volume coming in and an imbalance in favor of longs. Although it still seems like the dollar is, as always, a dominant factor here. Trying to dig its way out there, but still kind of sliding back in. 29. Now, what's this tab? Yeah, this is the stuff I said. So remember, it was talking about this watch. Now it bothered me that it grabs the hair on my hand. Well, apparently these particular watches have like a massive mod community behind them. So there's all of these you can buy like it's a $50 watch look, and it's a $100 kit mod. I think I might do it. Looks interesting. They fell back down a little bit. Actually, that slid real quick, didn't it? And keeping an eye on it here. Curious. It's moving around here. I'm not getting a clear read on what the orders are doing per se. Barkin's still speaking about doing more if they don't get inflation under control. Nick Timmeros, auto insurers are taking it on the chin. The cost to replace wrecked cars soared last year because car prices were way higher than insurers budgeted for, so they are jacking up premiums now. Auto insurance is a good example of how the pass-through of higher input costs could be reflected in core services, ex housing, and how this isn't necessarily a labor story. A point made here by forecast of the month. Oh, they came back up. Darn. So it's kind of slippery here, which I don't really like when the markets get like that. Slippery. Interesting. So put a feeler out there and they immediately filled me. But then it hits right back to 28.5 again. What's these clicks? Those are asks, pulling an ES. Yes, pushing higher. I feel a little out of breath. That must mean I'm nervous. Whoa, what the heck? Okay, so there was an iceberg there at 28? Like it got smacked down a little bit there, and there was a huge iceberg. How long on the simulator before properly trading, you think? As long as it takes for you to be comfortable, I think. So the first thing is if you're using the Jigsaw simulator, because the Jigsaw simulator is a lot more accurate on the fills and things like that, okay? And one of the mistakes that I see a lot of people do is they have a profitable day or they have a profitable week, and they're like, okay, I got it figured out and now I want to go live. That's probably not the case. You want to get yourself to a place where you're getting a reasonable win rate with a risk reward either equal or risk reward better than 1. So we call this R factor. So it's like your average winner to your average loser, and you want that to be over 1, which means that your winners are larger than your losers, essentially, right? So if you can do that and you can get a decent, like for instance, if you were doing 1-to-1 and you were getting a win rate 50% or higher, then that's great, right? Because typically, because of the spread and so forth, your win rate's going to be more like 40-45%, right? So you're doing that consistently, and you're picking your spots. Because I think one of the things also is something that I would want to experience on Sim first is a drawdown, right? You had a drawdown and you're able to deal with it. And with the way that we trade, because we're informed traders, drawdowns shouldn't be that deep, like, because it's all about being informed. And if you're informed, then, if you're not informed and you're taking trades, then you're doing something wrong, right? But you're going to go through that. You're going to go through a period where you don't really understand what's going on, and you have to experience that and go, okay, I'm not informed here. I shouldn't be trading this, right? Then once that's, I think, a key thing to go through before you want to go on to live, because that's going to be the thing that saves you from like just blowing the account. Now, the other side of this is that because we have these micro treasury yield futures that are so small, you know, you can go into trading one lot on the micros right away. You know, there's not as much risk to it as there was before. So you don't really have to spend a whole lot of time on sim. If you want to trade like the equity index futures, though, I would spend a lot of time. And I'm not going to say that there's like a minimum amount that you should do. You know, I think that there are some people that they could end up trading sim for like, you know, a year or two before they ever try doing anything live. I don't know. Yeah, sorry. So when I say profit factor or R factor, I'm saying your average loser compared to your average winner. So like normally we say risk reward, right? So if you're taking 4 ticks of risk and so this is risk is like your losers divided by your winners. Risk reward, right? So if you're taking like 4 tick winner and 4 tick loss and your winner is 8, right? Then that equals 0.5. Well, that doesn't make sense, right? Your risk reward is 0.5. If your risk reward is good, shouldn't it be a high number? So we do it the opposite. We tend to do it the opposite way. Your average winner divided by your average loser equals, you're right, 8/4. And that means that your risk to reward is 2, right? But it's not your risk to reward, it's your reward to risk, right? So then that's all the terminology is funky and stuff. So we turned to just calling it R factor. R factor. Or R in the formulas. So if you're getting an R above 1, and I think you would want to be like 1.5 to 2, preferably, and you're still getting a win rate that's good. So by the way that you sort out the win rate is it should be your R factor over 1 plus R, I believe it is. Let me double check. Oh, it's 1 over R plus 1. Okay. So, if our risk reward was 1, then that's 1 over 2, that's 50%, right? Break even win rate is 50%, right? If your R is 2, then that's 1 over 3. Your break even win rate is 33%, right? So that's kind of, you figure out your break even win rate. And it's going to be a little bit, you know, once you factor in commissions and the spread and things like that, it needs to be a little bit higher than that, but you get what I'm saying? So like if you have an equal risk reward and you're getting win rate over that number, over that 50%, then that's great. Right. So what I do is I do 1.5 usually, or that's, I'm not intentionally trying to get 1.5, but that's just what it ends up coming out to. So that's 1 over 2.5, right? Which is 1 divided by 2.5, 0.4, right? And I actually tend to get a win rate more like 0.45 lately. Makes sense. Yeah, what if you develop bad habits on sim? You can easily get frustrated and click add one. Okay, so number one is when you're trading on sim, you have to use the same scaling rules, right? So if you're starting with one contract and you only add another contract once you've built the account up a certain amount, right? And like resetting the sim, like who cares, right? What it comes down to is you made money this day, you made money this day. It's the size of the portfolio. See, like resetting the account only matters if like you're trying to show people, look, if I started with $100,000, it'd be worth $1 million now. Like that only matters if you're trying to show it to other people, right? See, what this really comes down to on the whole sim thing is that people who are trading live want to have the they think of it as an accomplishment. Oh, I'm trading live. That gives me some sort of a social standing, right? Like if you go in to a chat room and you say, oh, I made this money, and then they're like, was it on sim or not, right? Why do you care? Well, you care because somebody made money in that social prestige, right? Okay. But when it comes down to how good of a trader you are, it doesn't matter whether it was live or it was sim, as long as you're taking it seriously, right? Because you can do some things on sim to cheat just to show people good numbers and stuff like that, okay? But like from a personal development perspective, you take it seriously. You scale up the way that you're supposed to. You hold the stops that you're supposed to. And you practice, right? And if you're developing bad habits on sim, that just means that you're doing it wrong, right? But I disagree with this idea that you need to go over to live as soon as possible, and if you don't, you're just cheating yourself. That's I feel that just couldn't be further from the truth, because the reality is that like 95% of people, they're gonna move over to that live account and they're gonna blow that live account. So why not blow that live account on sim instead? But that's why I say, what actually matters to you? Do you want to be a good trader, or do you want to inflate your ego? Most people want to inflate their ego. They want to make a ton of money trading, and then they want to buy all of these expensive things and show them to everybody and show how great they are, because how smart they are, because they outsmarted the markets and made money from it, right? That's what drives most people. and then from that point, like what the size in your account says, that matters a lot to you, right? And so then because of the ego, you start to do these undisciplined things. You start to trade the size that's bigger than what you would be able to do in real life. You reset the account when it's doing too poorly. You lie to people about how you're actually performing, right? Because what really mattered to you was the ego and not the getting better at trading, right? But if what matters to you is getting better at trading, then what you're going to do is you're going to stick to your size, and you're just going to trade it one day at a time and figure it out, what were the flows that day, what was the information, and trying to understand why the market moved the way that it did and developing that way, right? And then there's no reason to size up more than you're supposed to. There's no reason to reset the account or any of this other nonsense, because you're just developing, right? Okay, so sim orders don't affect the market. You can, yeah, no, that's true. That's true. But I still think that you want to stay on sim until you understand what's going on. Which honestly takes a while. Statistics in a system that over time has a good luck with that one. Okay, but blowing 1,000 little tiny accounts is better than learning the experience and futzing on sim for a decade. Okay, but I'm saying it's okay to be on sim for a year. It's okay to be on sim for 2 years, maybe. So let me tell you, because here's another thing that happens. And for real, this happens is that, you know, influencers out there, they make money from you trading oftentimes. They want you, you know, like one of the things that I'll see is they'll make a trading room, right? And they are basically a pump and dump, right? So if you're a pump and dump, then heck yeah, you don't want people to trade sim. The longer that they trade sim, the more likely they are to find out that the whole chat room is a scam before they lose any money on it, right? No, they want you to go to live immediately. And people do try and drive you into live trading before you're ready. They do. Right? Yeah, you don't want to be trading sim accounts for 10 years, but you know. You know, I guess another factor here is what your means are, right? I mean, if you have thousands of dollars a month in expendable income, then yeah, you should go live, right? But the thing that I would ask yourself is, okay, like, what is my average drawdown? Like you trade sim, you have a drawdown, and then you come back and you make the drawdown all back. Okay, how much was that drawdown, right? And ergo, how much money do you need in your account? Like, not just to suffer that drawdown once, but to suffer that drawdown, you know, maybe 5 times, right? So if it's, you know, for me, like a bad drawdown would be like $50. I could do that 5 times. That'd be $250. Okay, so I need to be able to handle drawdown of 250. Well, then that means that I can have an account size of about $1,000 to $1,500, right? For micros, and you'd be fine. Okay, but then what if you just screw that up? You know, how long would it take you to get $1,500 again? Right? Well, for a lot of people, you know, a lot of the people that we see trying to trade futures, at least, you know, their kids, it takes them like a year to pull together that much money. Well, then that's kind of a problem, right? Because the chances are that you can blow it. Maybe you switch to live and make a real trade. You know, the thing that I think is really interesting is that when I'm on and I'm trading the way that I'm supposed to, it's not a problem. And I think it's because, you know, if you knew what the flows were going to be, you'd be stupid to try and trade against it, you know? And any time that I've got it wrong, it screws with you endlessly, you know? I think the most useful thing about trying to understand your impact on the market and understanding that the market does kind of screw around with you, right? Just assume that that's what's going to happen, because when you assume that, you will trade better, right? You will only trade when you really have an edge. You really have an edge. And so I found that as I've gotten better, I deal with that problem less, because the main thing that's made me better, in my opinion, is getting better at selecting my traits. Right? So if you're really doing this correctly, your live orders, when you move over to live, your live orders shouldn't affect the market that much, especially not if you're one lot. I mean, the market, it does affect the market, but might not be perceptible to you, right? So then the real difference between live and sim is like the psychological impacts of it, right? And there again, if you actually really have an edge, the psychological impacts are completely different too. So we got some more Fed speakers come to us. Yeah, on Friday there was probably a lot of psychological trading going on there like that. Yeah. Biden is speaking. Trying to take a victory lap on the inflation coming down. He understands that like his chances for re-election hinge on his ability to on the economy, basically. Oh man, well I thought I did pretty okay with this position so far, but it's coming back a little bit on us. Bing splash spreads alone. Well, yeah. You're not going to build the account trading one lot micros. That's for sure. I've gotten myself to the point where I can trade one micro contract perpetually, right? But that's actually, I'm fine, you know, in the end I'd say that's a lot harder to do than I thought. Oh, no, I still have a stop, though. But you're correct that when I'm wrong, I tend to get the same fat deals. But I actually think for my trading that it's actually the opposite. That what's happening is when I've got a winner and I'm really on, I don't push it. And so I'm not getting the far right tail that I should. Balance it out. Because the left tails haven't been too bad. But there's been so many $50, $100 trades that I missed that I should have gotten. That, you know, I knew I was in the position and all these things, and like I only took $10 on it or something like that. If you're risking 3 times, most of your trades will be losers. No, well, so when you look at like the MAE, MFE, they're about equal. So I guess that's the other thing is that I have not been taking single losses, right? Or large single losses. Instead, what happens is I'll take 3 losses in a row, right? Well, it has come back here. I could do something, but I'm not really getting a whole lot of hints here from like the flows and so forth. The dollar continues to push lower too, which is kind of interesting. Retail traders are really bad at letting winners run. That could be. I don't know. The thing is it's so hard to know when you know and when you don't. You know? It's this whole thing about like there's the risk that you know and there's the risks that you know you don't know, but then there's the risks that you don't know that you don't know. And so you constantly come into this situation where it's like, well, okay, based on this information, I think that I should go long. But then there's all of these unknowns and it went to a certain amount and it kind of starts to falter a little bit and you go like, oh, okay, I guess I just kind of hold it here. And then you take it too quickly. And you look back at it afterwards and you're like, no, I knew. Why didn't I trust myself? Right? Well, because there's still things that you don't know that you don't know. Is the news out? Well, CPI was an hour ago. The thing that irks me about the ones that I missed out on too was that it was very often that I had a winning position and I could have held on to it. Like it never would have gone negative. That's the thing. That's the one where I get so mad at myself sometimes. How was it? Okay, so the core CPI came out at spot 2 instead of spot 3 and the market took off. So the S&P 500 before the news was around 44.85 and now we're at 45.08. So we jumped like what? 20 points or so. Yep. And the interest rates or the treasuries shot up pretty high and we lost about 10 basis points or so. So overall good for the markets. And now they're kind of reneging around it, trying to decide what we do next. Now, if you're trying to do informed trading, then you should get winners that run. In fact, a good portion of your winners, and in fact, I would say that the goal would be to have to minimize the number of trades where it's like you take a minimal amount and have as many that run as possible, right? Congrats on 10K. Yeah, it's been like that for a while. We're actually to like 11,100. Like, I haven't been putting videos out because lots of things going on. My wife's been going back to work and that really makes it hard to make videos, right? And but the channel just keeps growing anyways. So that's great, right? Well, I am getting a little bit of clicky click behavior. I have not been posting on TikTok very much. So TikTok kind of pisses me off, to be honest with you. Because like I'll have a great video, I'll post it, I'll be getting tons of comments and engagement on the post, stuff that would have led to a a viral video before and then immediately gets cut down. And so I feel like I'm being throttled somehow on TikTok. I feel that I'm being throttled on TikTok because nothing gets over 200, 300K views, even when all of the beginning metrics, like within the first 30 minutes, are good. And then on top of that, TikTok isn't really set up for you to be able to benefit from any of the success that you do have on TikTok, right? So yeah, I just kind of stopped posting there. It seems to me that TikTok's business setup is to have as many regular people as possible posting TikTok content, so that they can ban or do anything that they want to anybody and not to have to suffer any problems. They don't want a situation like with what was it that came before TikTok, Vine. They don't want a situation like Vine where the top 5 influencers or whatever are like the entire platform, and they say, hey, if you're not going to pay us, we're going to leave, and then they leave and it kills the platform, right? So they want to limit the influence of individual people. And it seems to me that the usual kind of politicking is going on, like certain kinds of political opinions are more likely to go viral, and if a conservative opinion does go viral, like the creator immediately starts getting all stuff taken down and everything, which might not necessarily so much be a moderation policy of TikTok as much as it is that liberals just report them, which has always been a problem. Pisses me off too, but so yeah. I did that like yesterday. I made a TikTok. It got 300 views like really quickly. It got a couple of comments really quickly. So that video should go, should take off, and then it doesn't get another view after that. It's like, okay, you had your chance, and then they immediately take it out of the rotation. It's retarded. And the ones that do go viral are like always like the most random ones. Like I feel like it's giving me a random reward. Like you see this evolution that I've gone through on like almost everything, right? I don't know if this is just a part of getting older, but I just have zero tolerance anymore for bullshit. When you're younger, this kind of random reward sort of a thing, they're constantly pulling you in, you want to do it, but the reward is random. To me, it's like I don't play that game anymore. Like if I do something right, I should be rewarded immediately. And I'm not going to go in and put on all of this effort time after time after time for something that doesn't reward me. Because there's so many other places that I can put my effort that I immediately get rewarded from. Right? And it's the same thing in trading. So everybody wants to, for some reason, everybody wants to play these numbers games that they think exists, where, you find this setup and it has a certain probability of it working out, and you just do that long enough and it works out. Okay, well, the market's very statistically efficient. Those not very many of those exist, and the ones that people think exist, they usually aren't actually a thing. They're just believed somebody else and they didn't test it themselves. So once you get down into actually testing it, you find out that those almost never happen, right? Why would you play that game when you can just know what's going on? You can just know, based on the news and information that you're getting, what the future flows are going to be, and only take a trade when you know what it's supposed to do. Well, it's not supposed to do that, so I guess I'll take the loss. Right? Like it should do the thing that I want it to do, and if it doesn't, then why am I in a position? That's so much better world, right? When you get rewarded for your efforts. Because I feel like there's so many things in this world where what's happened is they have introduced random reward everywhere to try and convince you to give them meaning, you know, owners of capital, let's say, give them your effort for free. Because that's literally what TikTok is, right? You're making content for free that makes them billions of dollars. And hardly anybody has made jack squat from it. I mean, there's a couple of influencers like Bella Porch, for instance, that made money from it, right? But that was because she made music videos and stuff. That it was like deals that came outside of TikTok. It wasn't TikTok itself that paid her. All of the money that ByteDance is making off of TikTok, the creators don't get jack squat of it. Instant gratification is not good for long term. Well, there's plenty of things. So, like, here's the thing. So, there are a lot of skills that take a long time to develop, right? So, you can't come in and say, like, okay, I traded and it was a loser today. And so, if it was a loser today, then I should just quit, right? But there's also an issue when it's random, right? So if I come in and I take a trade and it doesn't work, I should know why. I should know why it didn't work. I should have a reason that, you know, it's not just like, oh, it's just random. Well, okay, if it was just random chance, then like, why was I in a trade? Right? So you should always be pushing forward, and you can do that in, you know, you're studying. You should understand the market better. You should understand the thing that you did better. You should be getting better at the process. And if you're not seeing that, then why are you doing it? Because if it's you do something and then you do it enough times and then you get a random reward, how do you actually know that you're doing it correctly and that the reward is just completely random? So I don't really consider it instant gratification. I consider it, you know, dealing only in effective things. Well, it looks like I could have scratched that trade, but I don't know, man. 915, yeah, it's right back to where I was. But I just don't really like the way it's behaving. There could still be a possibility for it to pop up, but I'm going to bet you that it continues to go sideways. Because the issue that I have here on this one was that the dollar moved lower. The Japanese yen has continued to move higher. But the treasuries are just going sideways. So, like, the flows that I thought were going to come through in the other markets came through. And I would even say to some extent that the flows that I expected in the treasuries came through as well. But it just didn't do much. Well, I'm going to feel awfully stupid if it goes now. I'll blow my nose here real quick. Yeah, right to where we were. So I'd be up 10 again. I'm a little bit miffed at how quickly that happened. And there was some longs in it too. So I think I mismanaged that. Like I said to myself, well, it shouldn't, okay, it's back at break even. I think that we should get a jump. I shouldn't have it go 10 against me. And then it went 10 against me, and I was like, fine, just I'll dump it. Sometimes the scene is go up and down, and I'm not sure what caused that move. Yeah, well, you read a lot of news, right? But some moves are just random. Some moves are endogenous, which is to say that they're just related to internal things going on and the liquidity and people getting shoved out of positions and stuff like that, right? But, especially if you get a really strong, persistent move, somebody's moving for some reason. And, if you're following the news and things like that, you usually have a pretty good idea of why. Or you find out by the end of the week. Right? And the better that you get at it, the more informed you become. The less moves that you'll be feeling like, oh, I don't know why it's doing that. But, our ability to see everything as retail traders is a little bit limited. If we were on the Goldman Sachs trading desk, then we would definitely probably be able to figure out what was driving all those flows, right? Because we would maybe have people on our desks calling us in and saying like, okay, we're taking a trade on this and yada, 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 right? Or I'd know what it was based on which clients were calling me, right? I kind of looking at it like why it felt like it kind of shaked me out. Why is it playing like that? Well, the action has been pretty tight since then, so it could be that I was just shaken out by the market maker. If that's the case, then I'm a little bit weary about buying this. Except for that there was some longs puking into that, so. I keep getting clicks, but they're almost always an ES. Well, darn, I sure wish I was in the position still, but nothing I can do about it now. And the thing is I don't think the risk reward is very good if I were to do like 39895. Unless this is going to bust out the top again and we get like a stop run that's crazy. That would have been 20. No, not 20. At A9, it'd be 15. Oh, I'm a little frustrated, Francesco, because I had a pretty good trade and they shook me out. I guess I lost 10 and I could be making 10 right now. So it's not like a huge deal, but it's a little frustrating that it turned back up so quickly. Like it was struggling. It was doing that for a long time. I gave up on it and then it shot up. It's like, okay, yeah. You're just screwing with me, right? That's how I feel. Are we about to get some news here? Hold on. Oh, Bank of Canada rate decision. I did not see. I'm not on the ball today, guys. That's a big mistake for me to not realize it was Bank of Canada today. Okay. We'll see where they go. I could have been in that if I was in that position. Well, that would be crazy if this goes my way, but what if it goes against it? Let's see what they do. Probably I shouldn't be in a position right now anyways, so. Okay. So hike as expected. Not too much reaction in the treasuries, to be honest. Okay, they did react to that down tick there. On that first trade, if I had realized that it was Bank of Canada decision, I think I would have taken the profit faster. Instead of trying to let it wait and see if I could get it to run, I would have just taken the 10 or 15. Oh yeah, you're reading that book? Good. I feel like every trader should read that book. Whoa. This is coming back up fast. Okay. Might see some iceberging at 112 there. Yeah. I don't. So Kashkari, when did that start again? 7:45. So he's been speaking for 15 minutes. So he's probably not done. Also remember that we have crude oil at the bottom of the hour. It's looking pretty strong, guys. They kind of lining up to make the push. This is kind of looking to me like some of the flows were waiting on the Bank of Canada decision. And now that that's passed, they can continue buying because like it initially came down, right? Nothing happened. It initially came down. And then after it came down even a little bit, and now we're getting this long order flow that's quite powerful. They're not pushing the highs yet, though. They came back a tick, so. I suppose since I took something, they could dink around with it a little bit again. We've seen rallies like these, but it feels different. No, this move is definitely unique because again, the pop after the news had an insane amount of volume behind it. An insane amount of volume. Like normally that amount of volume would have moved the market much further than it did. Right? Like, how do you trade almost 70,000 contracts and it's only down like 10 basis points? You know? A little bit slippery there. There's some offers here at 01 and 01.5. They're a little thick. But on the split side, it's also been that like the market orders have been long, like almost this whole time, and price has kind of been ignoring that, right? Price has kind of just been meandering wherever it wants. So I think that means that we probably do continue forward, but that it's just going to be like a really tough to hang on to, I guess you could say. That's the best trends are usually difficult to hang on to, right? It's like you get into it, you think you've got it, they shake you out, and then they push higher, right? A lot of trend days are like that. Or you get all these retail traders, they all think that's the end. They try and go for the reversal and they get run over time after time after time. Now look at those stacks after we traded through that. Some pretty strong stacks there after we just broke a new high in the... Oh, no, it's still equal. And now it's a new high. And some iceberging right there, that new high. So we're getting a lot of confirmation here on a strong flow coming through. Pretty big iceberg at 0.2.5. I need to reset. So the 30-year hasn't gotten to its high yet, but the other two lined up and pushed higher quite nicely. And you're getting a lot of, especially the offers. You notice that the offers are changing a lot and the bids aren't. Yeah, some of this flow is a little crazy, isn't it? I don't know, like I feel like if I was trying to trade technical analysis though off of this chart, that I would probably feel a little confused and lost. I mean, because that's a pretty random looking chart, don't you think? Like if you just had this, that's it's a little random. There has been quite a bit of movement here around the highs, but I think that they're doing okay. There was a little bit of selling through here, so. Oh, if I was trying to trade technical analysis, you would leave? Well, good. That's good. Yeah, I do want to get into some like portfolio optimization sort of things and try and run like a hedge fund type strategy. because I'm starting to feel like it always was like, well, how are you going to start that? How are you going to save up enough and get people to invest in it and things like that? And now I'm starting to feel like maybe I actually could do it. That I'm much more capable relative to other people in the industry to do that than I thought. Is Jonah Hill right or not? You know what? I didn't dive into that one too deeply because I kind of thought that the whole thing didn't. Oh my gosh, look at that. What is there's got to be something else. Somebody just said something or something, because that just shot up there. And the S&P, it seems like it's going crazy with the volume. The S&P 500 hasn't broken a new high yet, but there was some real volume was coming through there. Okay, so so here's what's going on with Jonah Hill. Okay, Jonah Hill had a girlfriend, and his girlfriend was a surfer chick, and she was like on Instagram, and she had stuff on Instagram showing off her beach body and I guess surfing with other guys and things like that. And that made him uncomfortable. And he said, if you still want to do those things and we're in a relationship, then probably I'm the wrong person for you. Okay. So Jonah Hill is very obviously been in therapy from reading the texts. Okay. And actually he made a he made a documentary on Netflix about his therapist, apparently. I want to go watch that now. Anyways, so he was doing, I think he was doing some healthy things, like he was setting boundaries, and I'm uncomfortable with these sorts of things and being assertive and not like blaming, trying to pound the other person into submission or blaming them, but just saying, this is what I need, and if you can't give that, then we need to break up, right? Okay. But all of the women on social media came in and were like, well, he's trying to control her and he's obviously insecure about it and stuff like that. And I'm kind of sitting here like, that doesn't make sense. They seem to think that he was trying to manipulate her. And I'm just sitting here like, how delusional are modern day women that they think that once you're in a relationship that you can still continue to throw out all of the thirst traps every day. Like, some people will do that, but I think the majority of guys would not do that. The majority of guys, if I was thinking, if my wife was like an influencer and was, like making money from making thirst traps, I don't know what it'd be, because I would love to help my wife make content. Like, I wouldn't have, all I would have to do is like do all of the gear stuff, the recording, pick the framing, all of this, give them, basically I could be the assistant that I wish that I had. I would love doing that. But doing it for, guys thirsting after her and them messaging her on Instagram all day and that kind of shit, I don't think I would enjoy that. Right? So I don't blame Jonah Hill for saying, hey, this is not for me. If that's the way that she wants to continue to do those things, like even after she's married, she's gonna have a hard time finding a partner, I think. But apparently it's manipulation. So that's why I kind of I didn't dig into it too much, because like what I read initially didn't really make too much sense. It was like people were making these huge conclusions based off these text messages that I didn't see in the text messages. And I'm just like, there's either way more to this than I realize, or like people are projecting onto it, And so I just kind of ignored it. But the further on it gets, the more I'm like, maybe I should pay attention to this, right? Well, the 30-year, they continue to push up. The 30-year hasn't broken its highs yet, I really wonder though that last push of volume that pushed us up to new highs, that pushed us up to 20 to 04. What was that? That was a little wild. Like, how is it you do what you like, but if you do it, I'd rather leave. How is that manipulation? Yeah, exactly. I don't get it at all. But that's where it's like, is it really just that there are a lot of girls on the internet projecting and they want to have their cake and eat it too? I don't know. I keep coming back to this thing that's like, you know what? Like, what drives you, Seth, is not what drives most people. I like the social praise, of course. Having people there and cheering you on and interested in your content, I think that's a necessary part of, at some point you have to have some reward, some success from that to want to continue making content. But I don't think that people do it just for the praise. I think that people do it for like their own ego's sake. That something about how they are perceived as their position in society is what matters to them the most. And that has never been a driving factor to me, because my approach has always been that if I do good work and I do the things that I'm supposed to, that's just kind of a natural consequence of being competent, right? But there are some people that the whole game is to show off as much wealth as you can and convince people that you're wealthy so that they'll give you things without ever having to have actually done anything worthwhile. Like that's the whole game for them, right? And I think that there are a lot of, Instagram models out there or whatever that's kind of what they've been doing. And so it's kind of startling to me that somebody would take that over a stable relationship, So that's why I'm like, I'm not sure that I can actually make sense of this, because it doesn't seem to me like most people approach this the way that I do. I guess that kind of has an implication that I'm taking Jonah Hill's side, but I should just kind of temper that with that I don't know if I really understand enough about that situation, and I'm not like them. I guess that's another thing. No, you know what? It was fun to talk about, it's fun to read about, but I think that we should leave Jonah Hill alone. Poor guy. He's gone through some rough stuff. He's been in therapy, he's done all of his things, and then he does what he probably should do, and everybody starts talking about his relationship, and the ex starts putting the private messages online and stuff. What a bunch of, they should leave him alone. Why does it look like there's a limit buy and sell orders? Oh, that is just the tick aggregation. No, you're totally, that's a good question, Francesco. So Jigsaw has a new feature that allows you to combine multiple ticks together, so that for some of these more thin ticked instruments, it's a little bit easier for you to follow the flows and see what's going on. So you notice that I'm not, the minimum tick size in ES is 1/4 of a point, and I'm only showing 4 points, full points rather, right? So it goes 21, 22 instead of 21, 21 and 1/4, 21 and 1/2, 21 and 3/4, right? And so when you're seeing them like both bids and offers at the same price, what that means is that it's at 45, 21 and 1/2 or something like that. That's what that's about. So kind of a disadvantage for using the tick aggregation. But I wouldn't use the tick aggregation on the instrument that I'm actually executing on. I might like have 2 ES DOMs open, one with the tick aggregation and one without, possibly. But I think you want a one that has the minimum tick size on where you're executing. Yeah. No, totally understand. Because it's like it's a relatively new feature, right? It came out like in March or something like that. But pretty sweet feature though, I think. I quite like it. It's a lot easier for me to track what's going on in ES now because of that. Okay, well those bids, we've gone below them a few times, but every time that we get to this 04, those bids stack up, man. And granted, there's some offers up there above us. Like it really kind of looks to me like people taking positions long and then putting their limit orders out to take profits or something. But this ever since the Bank of Canada decision, the flow in the Treasury has been pretty strong. Looked for something similar a few months ago when I trade gold and oil. Yeah. Well, if we're going to move into a world where the full depth of market from NASDAQ is a more common thing, then you definitely need it. So it was an important feature for Jigsaw to add. You're going to trade stocks, then you have to have tick aggregation. And I made a recommendation to them. They didn't they were like, why? They didn't understand it. But I'm telling you, it's a feature they should add, which is the ability to change the tick aggregation with the scroll wheel. So you come in, you hold like control and the scroll wheel, and it will change the tick aggregation. And then when you stop scrolling for like 5 seconds, then it will readjust. Yeah. Because when you're trading stocks, you could go be, periods of volatility and so forth where you want to change that. Okay. Well, it's still being pretty, I don't know. It's not as slippery as it was, but it's definitely wobbling around a lot as we move up. So I think the difficulty with that is that if this flow kind of falls out, it might be hard for us to pick up on. There was a relatively large sell there at 04. For all I know, it's already over. That is one of the stronger sell bars that we've seen. Spoos don't seem to be backing off at all, though, do they? You know what else it could be with the Jonah Hill thing is it could just be Reddit. Because a lot of the stuff that I read about it was on Reddit. Because I think that's where it first came out. It's kind of funny. Reddit has become so much a parody of itself at this point that the majority of the users don't even realize it anymore. It used to be, yeah, there's a Reddit hive mind. These are the opinions that they have. And, it's kind of like we all understand it. Then it kind of sucks, right? But now, so many new people have come in and they don't understand that. And so they just go and they repeat the hive mind, opinion and unironically. It's getting kind of bad. It used to be, if I want a liberal opinion on a piece on a political thing, maybe Reddit would be valuable to read for that, right? Now it's I don't know if I actually get anything from reading the comments on Reddit. Like, I think the thing that kind of turned me on that was the Supreme Court thing. It's like, oh, okay, we can go to r/law and we can read about what they think the potential constitutional impacts and legal impacts of this are and what other cases we might see based off of this and all that sort of a thing. And like all of the comments are just like unhinged that we should impeach the Supreme Court for this decision and this sort of nonsense. And I'm like, this is supposed to be r/law? Like, where's the serious posts? Tend to stay off comment sections and such. Okay, now the ES is kind of turning over. I can see the dollar kind of turning over. I'm maybe a little trapped here. Yeah, that's not good. So it looks like the dollar has stopped its decline at 100.35, and that reversal flow is starting to flow into the treasuries coming down, and pretty decent amount of selling here now. Which is not what I was looking to deal with, and that's why when I took there, I was like, well, I don't know. I guess I could have hit some of those offers. But, like, if I put a bid there, it's not going to fill, right? Oh, hey. Okay. Mm-hmm. Yeah, so I have two lists on Twitter here. Hold on. Let me pull it up here. I'll admit to that one, because if I had taken it off where I probably should have, I would have made $10 on the day, but it's okay. So here's my list of traders. Let's do this so we can kind of keep track of it. That may be as far as it goes, and it comes back, busts back up higher. That wasn't necessarily the trade that I was trying to make, though. I was trying to make the trade like the stop run and then see the distribution and get out. And it kind of like got short-circuited. Which is, when that happens, that's usually like you kind of want to get out of that, because inverse sine law, right? Although it seems like this decline is almost as much as the, no, maybe 60% of what was that initial jump. And we've only come back about a quarter of that. So that either means that there's a lot more pain to come here, or the buyers are still being pretty persistent and are just playing it passively now. Okay, Nick Timoros. The June CPI report probably won't alter the Fed's planned July hike, but it reduces the prospect of that second hike. Most officials penciled in 2 more increases last month, but did so on the assumption that inflation would decline more slowly. Okay. Well, that's what the market's already pricing, though, so... Okay, here's oil. Should be a fun ride in oil because there's already been pretty volatile over there. It's like initially they're selling here. This one's a build on the forecast. Probably done for the day, but I'm still kind of watching this spot to see if other volume trades there. I kind of thought that I got filled a little bit too easily on that. But, I mean, I had to chase it, right? Like, I realized at about 3.88 that it was not going my way, and I was like, crap, right? And then I slipped 5 ticks. It wasn't very good. They are kind of basing here. That could, you know what? I could be wrong. This could just be post-meta order impact. And with it being such a strong move, maybe that's why I think, you know, it looks to me like an opposing trade, but it hasn't come back like an opposing trade. So maybe it is just post-meta order impact, which would mean that they should start to build a liquidity hole here at 0.5 and just go sideways for the next 30 minutes. But that would also mean I don't want to be in a trade, right? I don't know. I don't think that I got as much of it out of it as I should have. And I mean, that's what's been happening to me, is like kind of on the edges. It hasn't been very good. But I did catch the flow. That was good. I really could have, man, I could have kept that original position and it would have been amazing. But that would have been against my trading, right? So 3905, 3885 would have been, oh, I guess it's $20 on the day. But you know, I didn't realize that Bank of Canada was coming. That was like not part of the plan, so would have been a little bit of luck. Nick Timmeros, one way to think about the Fed path from here, they were probably going to be 3 stages of tightening. Move fast, keep going more slowly, stop hiking, but let real rates rise as inflation slows. The question for most of this year has been when we would move to stage 3. And now the market is basically saying we move to stage 3 after July. Still at 0.5. Jack Prosibiak, once again, the neoliberal establishment is signaling that Ukraine will be partitioned between the West and Russia. Well, I at this point, I really don't see how it goes any other way. I don't think that the Ukrainians are going to be able to get back all of that territory. And there are some of that territory that quite frankly, I wouldn't want. Some of those Far East obelisks are just not worth the trouble, you know? I can understand fighting over Crimea, but the whole Ukraine thing. So one of the things that I hear on the Ukraine war a lot is like, we're losing the war, or Russia's winning, or, you know, Ukrainians are winning, or whatever it is just saying. It's just like, well, I don't think this kind of conflict works like that. Like, yeah, there's difficulties, and you have your victories and defeats, so forth in war. But like, who actually wins and loses? You usually can't see that until after the conflict is over. You know, like Russia. So let's just say that they establish some sort of a peace in here, and they give some parts of Ukraine to Russia, and then Ukraine keeps the rest, and they get explicit guarantees. So if Russia ever attacks Ukraine again, then NATO gets involved. Okay. Who wins, the West or Russia, from that? I'm not sure. Russia expended a lot to do it. They lost a lot of men doing that. It's hurt their economy doing that. But the West has also picked up a lot of debt from doing that. So who's actually better off? I think the West, but I'm not really sure. So I feel like anytime that I see somebody on saying, well, we're losing this war, it's like, well, you're not worth listening to then, because you just don't understand the nuance of international conflict. Usually it's not that simple. And then not only that, but then you can't predict the future. Like, you could come in and say after World War I, okay, like, we won the war. Okay, yeah, but you also set the stage for the next war. Right? I do wonder, what if... So like, here's the thing that a little bit of history that doesn't get talked about a lot, okay? Usually in your history class in school, they don't spend too much time on World War I, because World War II is so much more interesting. But also because a lot of bad decisions were made after World War I, right? And it didn't really actually pan out the way that people say, or people think that it did. So the reality is that they had a war, and Germany had practically won. Like, the reality was that at one point Germany had practically won, and then the Americans stepped in. And I don't want to go into why the Americans stepped in, because that's a big rabbit hole. Okay, but the Americans stepped in. Okay, like that's the thing we don't realize is that, yeah, like, America somehow got dragged into the war, and that's the only reason that they won. I often wonder what would have happened if Germany had just won. I don't think that it would have been a good thing. I don't think it would have been a good thing. But, is there a scenario where World War I could have gone that would have prevented World War II? And had ultimately, in the long run, led to a stronger world? Maybe. It's hard to say. But that's just to go in and to say that, like, it's really hard to know how the cascading effects are going to work in a foreign policy thing like that, right? Okay. So what's the difference between having the Russian war play completely out and, like, helping Ukraine until they've recovered all of their territory versus cutting a deal? Who knows? Right? Because it could be that you cut a deal, Putin plays it off as a victory, and then just uses that as an opportunity to build up more and try and take over the rest of Ukraine 10 years from now, and then really actually trigger World War III and nuclear war and things like that, and then would you consider it a victory then? Like... History's an interesting thing, folks. Oh boy. Okay, well, so they did kind of have a little bit of a decline there in the treasuries, but they came back to 885, which is where I basically got out. So yeah, I think I caught that flow correct. So here's what happened. Okay. Here's what happened. Here's how I screwed this trade up. Okay. We were getting this. And I basically caught this, right? And then once it broke out here, we got the meta order, right? And so I didn't get back in until about here. And then I didn't realize that this was happening. And so I had to get this, right? And this ended up being only net $5, but so yeah. Yep, net $5. So what should have happened is if I had wanted to do this, if I had gotten it perfectly, I guess in the end, saying that it was a long here and everything was correct. But I didn't know about the Canadian news. That's what I screwed up. If I had known about the Canadian and had waited until after the Canadian and then tried taking it long after that, I probably could have caught this and then I would have made $20, right? So that's where I think I screwed up. So to pull this back into the rant that I've been making this whole time, right? Is like, okay, I lost $5 today. Not a big deal. Okay, 5 ticks overall. When an average winner is like 10 to 20 ticks, okay? But was it just random? Well, no, because I understand what is driving the flows and how flows tend to behave, I'm able to explain why it happened to me the way that it did and what I should have done instead, right? So I'm learning from it. It's not just shake of the dice, right? Hey, how are you doing? A little late for you to come in, Salim. Let's I guess I'm okay. There was a point there where I was really, really frustrated today, but I guess in the end it's okay. It really sucks to have a day where like the market really moved and you're not able to get a whole lot from it, but that's how it goes with some of the biggest news events. So I've been doing better by avoiding that largest volatility, because what I've seen in a lot of my trading, like the further back trading, is like I'll do really, really great and then I'll blow it all on farms or something, and so kind of avoided doing that stuff. Oh, your grandma died? I'm sorry. Wish I would die young. No, you don't. We're gonna live forever. No, we're going to be twinkled. So in the Mormon faith, Mormons believe that when Christ comes back, that he will reign on the earth for 1,000 years, and this period is called the millennium. And during the millennium, people will not die. Instead, they will be resurrected in a twinkling of an eye. So you'll get to a certain age, like you'll get to 100 years old, and then you'll immediately turn into a resurrected being, right? Because that's the Christian belief, is that eventually you'll be resurrected like Christ was. Okay. Anyways, most Christians believe that, right? I digress. Okay. So Mormons believe you'd be twinkled. So we're in that time period. We're gonna get twinkled. That's what's gonna happen. We're never going to die. I can only hope. I can only hope. See, because the other thing that I have is like, you know what? I'm gonna turn into freaking Total Biscuit. I'm one of the I wouldn't call it a fear, but like one of those kinds of like daydream thoughts that will just intrude into my head, and I don't know where it comes from, is that I turn into Total Biscuit. That at some point I'm going to develop a brain cancer, and we do all of this great stuff together on the stream, fighting against brain cancer and making great content, but eventually lose the battle. That's what happened to Total Biscuit. Was like, that was one of the best YouTube channels, man. And then he died. Hey, thanks for stopping by, Francesco. Through AI. Hey, that could happen. Because one of the things that I'm working towards is making it so that we have a robot that listens to everything that I say and is trained on me and my trading, so that eventually the robot could trade like me. Or like just run the stream for me or something like that. It wouldn't be just me, because it would also, I think that it would also learn from you guys, and it would take stuff from other data sources. So it should surpass me. Effectively. What time is it? 8:46? About 10 minutes left. I guess I am a little bummed that we're -5 today, because I'm still a little upset about taking 2 or 3 losses on Friday, so. On CPI? Wait, what comment was it that I made that you're asking about on CPI now? I didn't take a position into the CPI, but I did take 2 trades afterwards that netted out to -5. Oh yeah, no, it was quite a while. It was 45 minutes after the news that I think I took the first one. And the thing is that the first trade was correct, but I got shaken out, basically. Because, like, as soon as I bailed out, it started coming, it came back up. And then there was the Canadian news. And then after that, we got the buying. So, like, I really could have just held it and probably made $20-25 instead, but. Actually, if I had gotten, like, the very edges of it, could have been almost 35. Like if I had gotten out at 875, that would have been 30. I think I might have held it though. I might have stayed in and thinking that I could get 50 off of it. Which, who knows? Apparently their lives live. So have you ever heard this thing that like the calendars that they used back in those days were shorter? And so a year in the earliest years of the Bible is not the same as a year now. So Methuselah wasn't actually 1,000 years old. It was like more like 200 or something like that. Yeah. I don't know if that's true, but that was like one theory I've heard posited on that. I don't know. I don't really understand. So you know what? That's one of those parts of Christian culture that I don't think I'll ever really understand. Is you know, like I'll be on a hot air, and there will be they posted some story about that they found where Sodom was, I think is what it was. So that they think that this city that they found is Sodom. And they're like, everybody's making it out to be a big deal. And I'm like, I'm not sure I understand making hay out of something like that, because, you know, it could like easily be disproven. Right? But there are some people in the Christian culture that just live and breathe on that sort of stuff. You know, like in the Mormon religion, there's tons of people funded by BYU and so forth going into South America trying to make archaeological discoveries that could back up what the Book of Mormon says, right? But then it's like, okay, so if you have a discovery like that, and then you come out and you say, oh, well, this proves that the Book of Mormon is true, and then you find some other discovery that ends up, you know, oh, actually it doesn't, then you look stupid for saying that, right? And so the church has never endorsed any of those sorts of things, right? And so I'm like, it's kind of weird to me that Christians would do that sort of thing. Like the larger Christian world would do that sort of thing. Sodom is so not okay. I don't know if we have time to jump down this rabbit hole. I'm not an expert on Bible history and stuff like that. But there's this guy on TikTok. He used to be the scriptorian for the LDS Church, but I think that he's become successful enough on YouTube and everything that he doesn't work for them anymore. Okay, but basically, people believe that it is implied that Sodom and Gomorrah were gay, and that it was a warning against homosexuality, but that's not actually in the text, nor in, you know, when you look at all of the history and everything else, that there's no evidence supporting that. And rather, the thing that the text seems to be pushing against is like not being hospitable to guests. So like, this is where you get into this crazy thing, which is like homosexuality has been considered a sin in Christian theology since forever. But in the actual biblical text, the only passages that we have that we can really truly conclusively say are like saying this is a bad thing are ones relating to you know, having gay sex with kids, right? Like pedophile stuff. So doesn't mean that that's that those things are okay. It's just that biblical scholars can't seem to like conclusively prove that. It's my understanding of it. Okay, well, they came back down here. I guess I would be at plus 10 again. In the volume profile strategy analyzer, do a test on the ledges of these volume profiles? Kind of. So I came across something the other day. So we made a strategy that would look at your volume profile and try to detect the ledge, which was to say a difference between the amount of volume traded in two prices that was greater than average, essentially. And that's what it was considering to be an edge. What I have discovered, though, is there's an easier way of doing this, actually. So when I construct a volume profile, I'm just creating a distribution profile, right? And one of the things once you get into Python with that is that you can also have it create a graph out of that. Smooth it out and it creates a distribution profile graph. That makes sense. And once you have a curve, then there's all of these other kind of statistical tests that you can do on it. And you can essentially detect spikes in the profile. So you can detect spots where the profile is jumping or dropping off really quickly. So then you could use those as spots for like jumps in the profile. Okay. Now problem. That's like if you're back testing that, you don't want to get yourself into a situation where you're like seeing the future, right? So it'd have to be a profile that like you're developing as every trade comes in and take it. Like that would be a very expensive trade to back test and everything. But what you could do is you could say here were jumps in the profile on previous days, and if we get to that today, then what does it do? And you could trade it off. That is something that we could probably do. Which is to say, the indicator that I gave you and that I'm giving you guys next week does not do that, but the data that I generated that from has the ability to do that. So it's something that we could get into later if we really wanted to. -5 is better than -205. Yeah, but it's kind of saying like I should have held on. I mean, look, it's time for me to go, and I'm not going to hold it past this, but I guess I could have held on instead of only taking -5. Meh. I think though, I don't know if this is another flow or not. I mean, if it busts and goes higher and all that sort of stuff, then yeah, I totally should have, because one of the things that I was thinking was like, oh, we should go long here. And I think we might break new highs and it could just be a trend day. Then you could hold it all day. But I was only looking to hold it till the end of my trading session. And I didn't know about the Bank of Canada thing. So I screwed up. That was the mistake. That was the big mistake that I made. Was not realizing that the flows were the way that they were because there was a central bank decision coming up. Right? That would have traded it differently. It's okay. There's always tomorrow. And all of next week and the week after that and the week after that. So I don't have to get too upset as long as I'm not taking a huge loss, right? If I take $50 loss in a day, then that kind of sets us back like a month, right? But just $5, no big deal. We can move past that. It was just kind of an okay. And it wasn't like the trades were bad. It was just my execution of them were maybe bad. So, all right, guys. I will see you tomorrow. In the meantime, stay excellent, team.